These concepts and these strategies work with whatever you want to trade. As these videos are getting more and more popular, I am getting more and more emails from very frustrated traders that are trading cryptos, that are trading indices, and so on. They are being inundated with a trade type that encourages the use of naked charts, and it is going very badly for them. The methods and the strategies they're being told to use are very complicated and they're low probability. They don't work most of the time. And new traders that are seeing only this kind of content, again, they are becoming very, very frustrated. So one of the big questions that I get over and over is, will what I'm showing in these videos work on other things that aren't Forex? Will they work in crypto? Will they work on gold? Will they work on the S&P and so on? And the answer to that is an absolute yes. So let's take a look at that. We're going to visit some of those different assets. Now, again, I am Ultra Blue Forex. Forex is what I trade, but we've got a lot of members that trade many more things than just Forex. So what I'm going to do is simplify this chart. We don't need all of this information on the chart. I'm going to put on just the moving averages, and these little arrows are going to help with the visualization. You don't need to see the signals exactly, but when you get these little arrows, you get an idea of where these signals happen. So let me do some modifications here. Now, with these mods, you're still getting the same idea. We have the 13, the 50, and the 200, and we get the idea of the trend direction. And with these little arrows that are popping up on the charts, when I zoom in, they're actual arrows. So we get these little arrows that pop up on the chart. So we can see at a glance where the approximate trade would be. So when you're taking a look at this, you can see that there's a lot of trades that we could potentially take in this string in here and a whole bunch up in here and so on. Now, again, my personal favorite are the currency markets, but we've got traders all over the world that trade all kinds of different things. So with that being the case, let's get into some of those other things just so you can see how this works on other assets. This is the Euro Japanese Yen. Let's take a look at Bitcoin. This is one of the biggest ones, is the crypto. Does this work on cryptocurrencies? And if we take a look at Bitcoin, what we're seeing is a trend that is down, and we're seeing that the price moves the way we want it to move. We've got this downtrend, and then from here, we get these moving averages in order. They come back up, they move back into order, and then we get those pullbacks into the moving averages. And you can see all of these red arrows. They're giving us the alerts to these short trades. And again, here we get all of these market moves to the downside. If we take a look at this from a different cryptocurrency, this is Ethereum. This is a 1 hour time frame. This will work on whatever the time frame is you want to look at. Let's look at a 15-minute. On the 15-minute Ethereum, what we're seeing are short trades, shorts. We're seeing a whole bunch of successful trades in here, and we're seeing some counter trend trades in this area here. We're looking at long setups, but you can see how clearly this functions. Now, we don't even need to have all three of these moving averages to see how well this works. Let's just get rid of the gray one. We'll stick with the 13 and the 50. Once we've got a trend and we know what direction the trend is, the concept is going to remain exactly the same. So if we're looking at a market that is trending down, meaning we've got the 13 under the 50, we're looking for the price to move underneath those moving averages and then pull back into those moving averages. And then from there, we're looking for the sell trades. So we're looking for that shorting opportunity after the price gets back to or pulls into those moving averages. And we'll see that again here, and we'll see that again here. And this is how we'll sell the cryptocurrencies. And if we're looking to buy the cryptocurrencies, it's the opposite direction. We're looking for the 13 to be above the 50. We're looking for the price to move above the moving averages and then come back into those moving averages and then move away and then come back into and then move away. We're looking for those buy opportunities as the price bounces from these moving averages. We're not looking for anything that is complicated. We're simply looking for the market to get itself into a trend, and then from that trend, we're looking for the market to make the pullback and then continue in the trending direction. So we're looking for the market to go short in here as we have that downtrend. The moving averages are in order. The 13 is below the 50. Price moves away and then pulls back into those moving averages. So in here, we're looking for that sell. We are in a downtrend. We're looking for the pullback into the moving averages and we get the sell. Again in here, again in here, again in here. You can see how this works over and over and over again. We get the sell opportunities, sell opportunities, sell opportunities. When we're in a trend, we're looking for the price to move away from those averages, move back into those averages, and then give us a signal as the price moves away from those moving averages once again. If we take a look at the market moving up, we've got a little bit of an uptrend in here. As we have that crossover, the 13 above the 50, we get a buy opportunity. We get a buy opportunity, buys in here until the trend crosses down. When the trend crosses down, we sell. This is really as simple as it gets. Now, at Ultra Blue Forex, we've got some very specific moving averages. We have a lot of extra tools that will help you get into these trades. But when we look at the very basics, we look at these two moving averages with a crossover indicator like the switch trend. We can see very clearly on cryptos, whatever the crypto is. Let's look at Dogecoin. We're in a terrible market situation, whether this is Forex, Dogecoin, or oil or gold. You don't want to be trading this. This is just going to be standard trading practices. If the market is moving sideways and is looking terrible, you don't trade it. It doesn't matter what that asset is. If it's a crypto or a currency or whatever, if it's not looking good to trade, you don't trade it. But when we get into a trend, then we get those opportunities to take trades in that trending direction. Then we're looking for those trades. And as the market is moving up, we've got that uptrend, the moving averages cross over. We're looking for those buy trades. And we can see how clearly the buy trades work when that trend is up. And then when the trend crosses down, we can see how clearly those trades work when we have sell trades in a downtrend. It doesn't matter if you're selling crypto. It doesn't matter if you're doing Forex. It doesn't matter if you're doing, let's look at another one. Let's look at the S&P 500. What we're seeing is a trend. And with that trend, we're seeing the 13 cross above the 50. We're seeing them price pull back into those averages and then move away, pull back, move away, pull back, move away. So we get all of these buy trades in here as the trend is up. We get buy, 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 and these are going to be the profitable trades. And here we've got the downtrend. So we're looking for the sell trades. And you can see how this works. You can see that the price is dropping below those moving averages and then pulling back into the moving averages before they move away. Maybe I'm zoomed out a little bit too far. Let's zoom in. We've got an uptrend. So what we're looking at is the price pulling back into the averages, and then the market moves up. Price pulls back into the averages, and then the market moves up. Price pulls back, and the market moves up. And if we take a look at this a little bit earlier, we're looking at some of the sell trades in here. This is the S&P. So we've got the sell trades in here, sell trades in here, sell trades, sell trades. We have that downtrend. The price pulls back into these averages, and then we get the opportunity, or we'll look for that opportunity to go short. Let's take a look at a few stocks and see how that goes. Let's start with NVIDIA is doing well. Currently, NVIDIA is moving a little bit sideways. I would stay out of a chart that looks like this simply because of its range-bound nature. So we get a NVIDIA chart that crosses to the upside right in here. And then we're looking for those buy trades. And you can see how clearly these work. These are profitable buy trades. Then we're looking for the moving averages to cross down. Now the price gets underneath those averages, pulls back into those averages, and we're looking for those sell trades. There's only one way that you need to trade, and that is trading in the trending direction. What we're looking for is a market to move in a trending direction, and the way we discover what direction that is by using two moving averages. We've got the 13 and the 50. We have the 13 above the 50. We're looking at an uptrend. The price moves above those moving averages and then gets into those moving averages. Price moves away, pulls back into those averages. Price moves away, and we just keep doing that until these moving averages change direction. We get a crossover. Now the market is going to drop below those moving averages and then pull back into those MAs from underneath. And then we're looking for the sell trades. And then we get the pullback, and then we look for the sells. It doesn't get any easier than that. So if you are struggling trying to make all that social media nonsense work for you, abandon that just for a week and try it like this and see the difference that following a trend with a couple of indicators on your chart is going to make. Using a couple of moving averages like we've got here, the 13 and the 50, you're going to get the trend direction. You're going to see the market when it moves away from those averages. You'll see when the market pulls back into those moving averages. At that area, you're looking for a signal to go long. Then the price takes off and it moves away from those moving averages. But then you're looking for the price to pull back into those moving averages. You're looking for a signal to go long, and then you're looking for the price to move away. And that is the boring process that we do day in and day out. So give it a try. It will be worth your while. Now, if you want to get into more detail about this, you can join me at ultrablueforex.com. The link is in the description below. And if I don't see you in the Ultra Blue Forex members area, I will see you in the next video.